All right. So we are back and we are live. And today we're going to be talking and just giving you a quick update of where the market is compared to, last year, where rates are, things like that. And I brought Michael DeBacker with the core team at USA Mortgage to talk to everybody and share his knowledge and what he's seeing on a few things for everyone. So how are you doing today, Michael?
I'm good, man. How about yourself?
I'm doing great, healthy and blessed. So there's no complaints
That's good, man. Thanks
on
for having
my
me
end.
on.
A little crazy, two little kids at home, 6 and 2, but hey, it's all right. It's a
Yeah,
blessing to be here with them.
I got the two
So
young
let's
ones
decide.
too, but yeah, go
Yeah.
ahead.
So tell me, Michael, where are rates today compared to last year?
Yeah. So we got a report out recently, and basically rates in general. We won't get into specific numbers and things like that. I will tell you they're historically low from that standpoint, but they're saying they're 1% lower than where they were last year, right? So 1%, that's a significant difference, especially when rates were really good already last year.
Wow.
And what that really does, Matt, is I mean the obvious thing, right? It gives you a lower monthly payment. We understand that,
Yeah.
but it's more than that. And what it is that if you were looking at a home, let's call it 250,000 was the price you had in mind. If I come back and tell you that rates have dropped 1%, then you can now qualify for a home at say 290,
Oh, wow.
which can be the difference between an extra bedroom, obviously more square feet, maybe a pool, maybe not. But point is it gives you a lot more buying power than what you previously had. So those little extra things that you were being priced out of previously, you no longer have to worry about. Or if you've been looking at 250,000 price point, then that payment that you were previously being quoted has now dropped, say $180 a month.
Oh, wow.
So
That's a good amount.
from a budgeting standpoint, it makes things a lot easier, and
Yeah.
now you can afford those other things that you know are inherently going to be coming into play, like maybe higher electric bills or water bills or what have you, when if you're upgrading in that situation.
Yeah. So now, does that also affect anybody who's refinancing or wants to refinance it? Is it kind of work the same, or is it different in those terms?
Yeah, absolutely. I mean, right now I'll say we're still in the middle of a refinance boom, and it's just because of the amount of savings that we can get our clients is really ridiculous. There are people out there that have interest rates in the fives and sixes, and there, when you're coming from a 5% interest rate down to something that's possibly in the threes, that's a several $100 a month potential savings that you're looking at. If nothing else, it's tens of thousands of dollars in interest over the long haul. So absolutely, it's a huge difference for people who are looking at the refinance options.
Yeah. Now, so I know for when we first started dipping into this, I think maybe early March, more as markets were crashing, stock markets of that. But then mortgage rates were jumping up and down daily. Is that kind of where we still are, or things really kind of settled back down,
Sure.
where you don't see those type of daily changes?
Yeah, thankfully, my gosh, thankfully we've settled down a bit. So, and settled down means just stable. There was a period of time we had some clients together, and God bless them. From one day to the next, that conversation was just drastically different. And what little hair I had, I was pulling out because you just you
Dude,
can't.
it made me shave my hair. I mean, that's how nervous I was. I was like, no, I'm just
And forecasting is impossible because even today, right now, the markets don't make sense. So normally the stocks and bonds, they work inverse of each other, but that's not the case right now. So when someone says, "Hey, what do you think rates are doing, or what direction are we going in?" I don't know. I don't know because it doesn't make sense. What I can tell you is we are stable currently, and rates are very low, and we've been that now for probably 3 to 4 weeks. So they definitely are again in a place where I can confidently tell you here's what you should expect moving forward if you start going looking at homes. But I will also say this: if and when we come out of this coronavirus mess, uh, once there's enough consumer confidence in the market, everybody's back to work, rates are going to come up. And not to confuse that with the Fed rate that's almost at zero. Those are two very different things, despite what people believe. But mortgage rates, in my opinion, will come up, and rapidly. So it is a good idea, to not wait this thing out if you can help it. Everybody's got a different, unique circumstance, and
Yeah,
COVID
definitely.
19's, affecting them differently. But if you have the means and you've been wanting to buy, it's a tremendous time. You're getting everything kind of on the cheap.
Yeah, and I agree. Definitely. When I talk to other high producing agents and network with them, and just kind of get everybody's opinion of where the real estate market is and where do we believe it's going. We believe that once things settle, once everybody's back at work and back to what we call the new normal, we anticipate that there's going to be a big boom in real estate where a lot of people who had stopped looking or were furloughed and now back at work and now can buy that house that they needed. That it's gonna boom, and unfortunately, that's gonna be back to where homes have multiple offers and you're competing against one another and stuff. So
Right.
I agree. I definitely think now is the time to buy if you're able to, and if you have that need or so yeah, it's definitely a great time, especially here in North Texas. I mean, we've been great for quite some time, and I think we still will with enough businesses and jobs being created over here and coming in. Obviously, not right now because of everything, but I think once
Yeah.
things get back a little bit more at ease, it'll start opening up. So definitely.
Yeah, no question about it. And with that 1% interest rate report we got, we also got an applications report, and applications are only down 13% from a year ago. These
Mhm.
are purchase applications, not refinance. And I mean, 13% from a true number standpoint is a lot, but considering we're in the middle of the most monumental event that we've dealt with, at least since 2008, 2009, to
Yeah.
only be down 13% from what was an extremely hot market last year, that tells you everything you need to know, is that those who are sitting waiting it out, if it's by choice, again, I always want to preface that, if it's by choice and you're waiting it out, you may find that you missed out, because this market is heating up. Clearly, I've personally noticed many, many more applications coming in right now. And that's a great thing. That's a beautiful thing for our economy. But if, again, you are waiting out the storm, the data right now does not support you getting a better deal in 2 to 3 months compared to what you're getting now. So just keep that in mind. Again, every scenario is different, but there is actual data out right now that people are moving. People are wanting to get rolling on this thing. So don't wait too long.
Yeah, definitely. So talk real quick. Don't want to take up too much of your time. But what about down payment assistance? A lot of people, depend on some of those programs out there to put them in a better position to buy a home. Can you just touch base where that is right now with any of those programs that are out there?
Sure. Yeah, a lot of lenders will tell you they don't exist right now, which is highly incorrect. We are still doing them. Now, there are some additional restrictions that we have to be mindful of, and we'll really tackle those when we go through that pre-qualification. Just to give you an example, you have to now have a certain credit score to be able to exceed a certain debt to income threshold, right?
Gotcha.
That didn't exist before. So things like that are tweaking as we go along, and again, we'll play those things by ear. But no, absolutely, you can do them, and they are a great product. One of the other things that we've done now is we have another program out that is just offering such pricing that has really made it an incredible opportunity for our clients. And I, again, I can't get into quoting pricing right now. Everybody's going to get something different than the
Yeah,
next,
everybody's
but
different, based
right.
off of where they're at, and stuff. But
100%. But for those that had scores around 620, 640, in that ballpark, when COVID-19 hit, all of the investors basically pulled out of that market. Many lenders weren't even issuing any loans, period, under 660, or if they were, it was now costing an arm and a leg to get that. Well, the program we now have in place is avoiding all of that. You're getting incredible pricing despite maybe needing a little bit of work on the credit report. So don't let those things discourage you just because one lender told you no right now. Definitely reach out, let us know, let us take a look and see if we do have something for you, because I bet you we do.
yeah, wow, that's amazing. And I just wanted to say a big thank you to you. We're closing on our refinance today, saving us over $200 a month, and so we're
Awesome.
blessed to have that, and thank you for helping us and guiding us through that and whatnot.
Of course.
So guys, we want to give you correct data. Like he said earlier, it's all backed by data. It's a great time. If you have been on the fence, at least have that conversation with us. Let us talk about it and see if we're able to help you and if it makes sense for you to buy right now or sell. So definitely reach out to one of us. We can definitely put you in touch with each other. And if you have any questions, let us know. Michael, how can they get a hold of you?
You can get me on Facebook at The Mortgage Mike. Or you can go to my website, which is www.mortgagemike.us, as in United States, or directly on my cell. Give me a call or text 214-718-2248.
Awesome. Well, thank you, Michael. Thank you for sharing everything. And guys, please reach out with any question. There's no such thing as a dumb question. And guess what? I don't charge you to answer it. So, reach out if you have anything. If we can do anything else for you other than real estate, we're here to help you. Hope you all have a blessed day and have a great weekend.